Good morning, traders. Yesterday's game plan delivered a solid $1,400, proving once again that sticking to the plan pays off. Today, we've got CPI release coming up and the market is still in a tight balance, waiting to make its next move. Let's break it all down. Just like every day, we start with the 10-day volume profile. And there we see that there's no big changes on the 10-day volume profile. We are still compressing inside this value, showing that the market is waiting for direction from today's CPI reports. Big move often follow long periods of compressions, so stay ready for possible breakouts. Then we jump into our weekly volume and daily candles chart. The weekly volume chart still looks a bit the same as yesterday. ES is locked inside this tight range with a value area high of 6,094 and a low of 6,076.50. The POC sitting at 60.88, just the same as yesterday. We are still in balance, sitting inside this previous value right here. So a break above 60.94 or below 60.76 will set the tone for the next move. Price is coiling up slightly with yesterday's low at 6,057.75 is a key level that bears need to break. So we jump into the 2-hour. Looking at the 2-hour delta, price is holding very nicely between our two key single print zones above 60.97. We have Friday's signals, and below 6,066 we have Wednesday's signals. Buyers pushed through this 6,075 level yesterday, retested it. Sellers tried to break it again, but it held. We got up, got more buyers in, and we failed to break this high when absorption kicked in around this 60.89 level. This tells us buyers and sellers are active, but big players are capping the upside. Our New York TPO chart shows value building above this 60.75 level that we had as our midpoint yesterday, sweeping stops at both sides below and above of Monday's very tight New York range. This means liquidity is being tested, but we still need confirmation for direction on our 1-hour level chart. Today we get slightly higher strike prices with a high of 6,140 and a low of 6,040. The midpoint is at 6,090, aligning with Monday's and yesterday's value area high, so we will use this as our line in the sand. 60.90 is our battle zone. Above, bulls will take control. Below, bears could possibly step in. So for a bullish game plan, holding above this 60.90, we can start opening longs around 60.95, which is our single print area, targeting this 6,106 we've been talking all week about, this 6,123, which is our previous high, and 6,140, which is our strike price high. And for a bearish plan below 6,090, we can activate shorts at 6,075, our level from yesterday, targeting this January close at 6,065 and the strike price low at 6,040. A potential breakout is growing, so we expect prices to move very sharp at CPI. So no major moves yet, but CPI will be the key catalyst today. We expect fast reactions, liquidity grabs, and possible fake out. Stay patient and let price confirm direction before committing. This daily game plan drops every day before open, so subscribe, hit that notification bell and stay ahead. Trade smart, manage risk, and remember, if you're not staying on top of the market will stay on top of you.